Okay, nice and simple. Good, really good day today, actually. Unsurprisingly good volume. So I actually started buying this down in the morning, which I don't normally do. But the reason, so this is a 10-minute chart on the Dow. If you look at the actual fact, what I was looking at earlier was this weekly chart. So despite being a day trader, I'm really focused on, a day trader and an investor. But this is the weekly chart in the Dow, a little bit messy. Let's take this pink zone off. But you can see that a couple of weeks ago, or about 3 weeks ago now, we had this dip, this drop into 33,750, which was a trend line, well, which you can create a trend line back from that point. There was a lot of support back there anyway. Let's have a look. Just try and remember, there was that level of support, which we didn't actually touch. Anyway, we closed highs. I've been buying dips all this period. And here, obviously, we're actually quite flat for the week, but there was a good, we took, let me see my notes. Yesterday, we took 80 pips out of the Dow in about an hour or so, and today I took 120 in not that long really, 30 minutes, less than that, I think. Anyway, you get the picture. It's new all-time highs, breaking. We are somewhat divergent down here, but at the moment the dips are still viable, and we could potentially come up to 36,850. The divergence is this MACD. You can see we're under the midline. We've been under the midline ever since May 17. It's a lagging indicator, so you know it's a guide. I only ever use indicators as a guide. I don't use them to actually trade off. This awesome oscillator is it's basically an enlarged histogram, MACD histogram. Works in the same way. You can see we have been losing momentum all the time. We've been climbing higher. This has been making lower highs, and the volume it's a quiet time of the year, isn't it? And the volume has been coming off, but we still keep grinding higher. We're sort of climbing this wall of fear, which the market tends to do sometimes. Anyway, I was buying dips in the morning. Non-farm payroll on Friday was here. So all we've been doing so far since Friday, obviously we're only barely into not even halfway through the week. All we've been doing is ranging around this non-farm payroll range. So yesterday was easy pickings, because all you do is, all I did in a situation like this is to buy a dip, is to buy the support and sell the resistance. Buy the support, sell the resistance, buy the pullback, sell the resistance. So there's a nice, I got a trade here, got a trade here, and got a trade and took it off here. That's just one trade today. It's just the Dow, but this was at least 120 pips. So if you're trading, well, I don't know, maybe you're just trading £1 a point. If you're trading futures, then you've got $5 per 1 pip move on a main contract. You can trade mini contracts. I've forgotten. I think the mini contracts are $1 a pip. I think. I can't remember. Anyway, so you can trade CFDs, spread betting, futures, whatever does it for you. So the reason why I had this, so the target was easy as well. I took this off at 249, because that's the Friday high. So all we're doing is zigzagging around the Friday move. Okay, we're pulling back, we're pushing up, we're pulling back, we're pushing up, we're breaking up, back to the Friday high. And now we're just sideways, but if we can hold this 250, then we're potentially going up to 300 plus. But we're coming up on, look how the volumes pull back. Volume's the lifeblood of trading. So if the volume is pulling back, and obvious why the volume is pulling back, because we're hitting resistance. So you get a spike at the open, spike in volume at the open. So into the open, you get a 1, 2, and then the 120 pips comes from the C wave, the third wave in the open. And surprise, surprise, a lot of people are doing the same as me, because you can tell that because once we get to this 250, the volume it almost evaporates. And the volume yesterday was poor as well. We were so if you to significantly break, and for me to hold this, I'll see this volume increasing, not decreasing. Okay, we are beginning to pick up here. So if the volume increases here, there is the potential for this to pick up and go. But in the meantime, I am not doing that. Okay, so that's the Dow. If we look at the NASDAQ, so I bought the low in the NASDAQ. Took it off for a lot less move. So this was the Monday. So we dipped down here overnight Monday from the Sunday open. Pushed up here. So a lot of the US traders didn't get a opportunity to buy down here at 15,009. So guess what? The US market drags it back and then they ping it higher into resistance. You get a little push higher in the volume. And then the volume tails off. So that's the move I got today. Got in a little bit too high, but then added on the low when I realized what they're doing. I started getting at 40 and they took it down to 08. All right, so that's 2 trades today. Let me go through the third one. I didn't get the oil, which is unusual for me. I normally trade oil quite regularly, but for some reason I didn't. Well, I traded yesterday and then got out too early. Anyway, let's look at the gold. The gold is an unusual one. What I did on this, I'll share this with you. This is not my normal way of doing it, but what I did was I put it's US inflation, got some inflation data tomorrow. What I did was I thought to myself, well, it's had a decent bounce. Once we collapsed, a bit of sort of a mini flash crash. Once we collapsed to 1665, we got a significant bounce to 1752. So I thought to myself, well, if I measure that bounce and that stable area of the gold, you will note that what we actually ended up doing at the lows was coming to 50%. This is the 50% level, which is not actually a fib number, but let's not go there for now. That's for another day. So 1718 was 50%. We've got a higher close, pin bar, higher close, and an initial move. So I think we could now pull back something like to 1722, 1720. If that gets bought tomorrow, I think we could potentially come back up to this 1752 plus. Okay, so that's why I think the low in the gold was viable. And that's why I took a move out of it. Okay, so that's 3 trades today. Let's look at the oil in detail, because the oil has been doing well. I liked the low. I mean, if you look at the daily, this 66.25, bear with me 1 second. The 66.25 was a very, very interesting level. But again, volumes have been a bit sloppy in the oil. But every time, as you can see, we've got a 1, 2, 3 wave correction, push higher. So we've got another corrective wave into this support. So this is potentially a double bottom. And if we hold this 68.50 invents tomorrow, we could potentially wind back up. I'll tell you what, if we go back to 66 or 66.20 tomorrow, I'd be a buyer of that one if we hold at this area here. So traded it yesterday off the floor, but I should have held it overnight. And I didn't, which is a big mistake. I make them occasionally. All right, so things like oil, gold, and Dow are very technical markets. So they make for great trading vehicles. I mean, if you look at, I'll just look at the intraday chart. So it's good money. I mean, if you trade futures on these, you could potentially make, you know, just with one or two contracts, you can make, you know, 1 or 2 grand a day. So what's it going to do? Yeah, this is the oil today. Volume tends to come in at 2 o'clock UK times. If I arrange the 2 o'clock level, that's the 2 o'clock range. So we dip back into some earlier support at 66.95. Don't go much below it. And in fact, we don't go below it into the Dow Open. And then it just breaks up and heads up. So it's a simple 10-minute chart. Just got volume on it. Nothing complicated. Mark off the open range, look at where the support resistance is, and then buy and sell according to what you see. You can see this is a nice, so yesterday we dipped and broke out actually into the, from the Euro session. There's the open range on the US session. So right there, so dip it back underneath at 65.50, pull it right up, and then we start this journey up to 68.50 plus. That's the sequence. So you get the initial breakup, the pullback, and the wave. So 1, 2, 3. So buying on 2. Buying on the end, if you get a wave 1, buying on the end of wave 2 and riding out into the high is a great way of trading. So it's not about picking a bottom, it's about understanding the sequence that you can see in a day trading chart, and you can do this on a stock. Let's look at a stock. Let me just pick a good one out. And clear this and get today's stock. Right, let's look at MIMO. MIO. No, that's the wrong one. No, I've done the wrong one again. It's a NASDAQ stock, isn't it? Actually, it must be that top one. Yeah, it is this top one. Right. Okay. Let's do it. Let's try another one. I did get the right one. Let's have a look at what's a good one. Let's look at KXIN. KXIN. This is better. This is better. So you open here. So that's the open range. It's very bullish, so you only got to pull back to that zone, 250. If you bought 250 with a stop under 235, if you bought that at 450, you almost get 340, just fall short of 340. So this is 240 to almost 340. So that's a 30. That's a $1 move on a tiny stock. So if you have 1,000 shares at $2.40, you've got yeah, you end up with a grand profit. Okay, so that's this. So you buy. This is typically how you would trade that. You buy in this area here. The stop would be under here, and then your target would be up there. But if you if the volume starts to come off, then just take what you've got. So the high was about 3.3. 3.4 is the target, 3.3 is the high. It drops right back. So it does a 1, 2, 3, and it does another three-wave move. 1, 2, or it does another two-wave. At the moment, it is doing another three-wave at the moment. It's likely, I wouldn't be at all surprised to see that come back to that level again into the close. You can see every time we're making lower highs in the volume, every time this comes up, so it's very divergent. It's pump and dump. It's what's called pump and dump. And that's a classic example of how to trade pump and dump. Wait till the initial move's over, buy the pullback, and then trade the high, and then get out. All right. So it's a quick 20-minute. I promise you a 20-minute intro. That's it. If you want to join me, if you want to learn this system, about how to trade the Dow, what I've showed you here is a very crude example of the system, because I'm not going to sit here and give you the system for free, because I spent years refining it and developing it. If you want to join me in the trade room, then let me know. In the meantime, that is what we are doing in the trading room. So this is the 1 hour. So you can see it's pump and dump because it's going nowhere on the 1 hour chart. In fact, let's look at the daily. Yeah, so it's just, oh, we had a big push up here in October. So it's got a history of doing this. In October, wow, we went up to $13.40. And look at that, the 350 the 350 high is this zone. We've got a gap now. That's part of my system, which I'm not prepared to give away. If you want to trade these, you need to come on the program. Yeah, so there's a possibility this could come all the way back down to 170, or at least $2. But the potential for this in the future is good. So what I'm suggesting is going to happen is I'm suggesting it's going to come back into this apex. $1.70, and then potentially start to wind up to 5+, potentially. But it's a pump and dump stock where, you know, that's a significant move. If you look at how many weeks and months, this stock did nothing in all of this period. So once we drop down here from late Feb into the 5th of August, this stock did nothing, and then suddenly they pump it up. Actually, it's got pumped up on Friday. So so this is just a follow-on from that pump up on Friday. Let's look at the volume on Friday. Oh yeah, sorry. Okay, yeah, okay. I'm half asleep. Yeah, this was the Friday open. This was Friday. So it pulls back, seems to take another dip up here, and then so all these pullbacks get bought on volume. This is an hourly chart. So all this pullback to 247 gets bought, and then today you get a chance to get a $1 move up here on a pump and up setup. More than likely news, yes, more than likely. But I've got a particular way of scanning for these, and so you can pick them off. Let me find another one. You know, it's irrelevant. You're barking up the wrong tree. It's irrelevant why it's done it and how it's done it. What is relevant is how to find them and how to trade them. Let me pick another one. Let's look at. Let's find a bigger one. Not sure this one's going to work. Let's have a look. Called AMC Entertainment. I don't think this one's going to work. Yeah, okay, it's working a different way. This is potentially something to watch and keep an eye on. They've pumped it up at the open. So this is the open range. Well, that's where you open and close. So at the moment, all they're doing is backfilling. It's got pumped up and dumped. Now they're backfilling. So the main support is, well, the real support's down there at 32.60. If we come down to that 32.50, 60 and hold, you might get the opportunity to take that back up to 37. That's not, I wouldn't normally trade that. You're in AMC, right? Okay. Well, you shouldn't be getting burnt on it if you're. Are you day trading it? This is the daily chart. We've got support at 28. So it's been as high as 71.60 not that long ago. 2nd of June, wow. Okay, this is a very interesting chart. This is a very, very interesting chart. This is the main support zone. We've come off of this 32 area. 28 is the big number, but the 31, 32 bucks is very interesting. I can see that coming down to 30, 32 at some stage soon. If that does, basically what we've got here is we've got a lovely breakout. We've had a 3-wave pullback into 64. That's failed, and all we've done is boomeranged. We're boomeranging back to the base, back to the 1st of June. That's all we're doing. So we are potentially doing. We could, longer term, be doing that. So that's the initial A wave. It's taken all this time to do the B wave. B wave is potentially over. What price did you get in on this? In the 50s. Wow. Okay, you need to come on the program because you're not in tune with what this market's doing. That's the A wave on the 2nd of June. It's boomeranged right back. Yeah, when you get a breakout, that lots of traders miss. When you get a breakout like this, with volume, a lot of traders who've missed out on it, just wait and put orders in down here. This is the fire line, what I call a fire line. So all the big money has been hunting for a pullback down to this 28, 29. And there is the potential for this to go back to 72.60, and it looks as if, because this is a 1, 2, so we're potentially in wave 3. Yeah, so this is a bullish consolidation. So we stay in this range for quite a long time. We stay in this range for June, July, and then we start to fall out. But when we fall out, we come back to the fire line. So we come back to the fire line, that gets a bounce. There's still, the volume's still not there to support a higher price, so they drag it right back. And the volume, and now we've got traders who are, or institutions, not traders, institutions who are beginning to build a position down here. So we've spiked up, we're filling the gap, and now we could potentially start to wind up. Right. Oh, okay, I get it. Yeah, there's a lot of traders who have a strategy of looking for stock with a big short volume on it. And yeah, so they pump it up to shake out the hedge funds, to shake out the big money. Okay. Well, I think we might end up just shuffling around here for a while, and you might dip underneath this, but ultimately I think this could wind up here. Year end, I'd be surprised if we're not up here at year end. But in the meantime, it might dip underneath. Personally, I think there are better stocks out there, but so look what happened back here on January. We had this big punch higher in January. And look, the same things happened. Exactly the same things happened. It pumps up, and they drag it right back. It's a boomerang trade. It comes right back to the breakout area in February, March on volume. And then waves up, comes back, waves up, and then gets a breakout pattern here. Right. So it's possible that they might drag this back down into this area. It's possible they might drag it down to this breakout here. So a full boomerang onto this June level would take that back to 20. This is obviously what the hedge funds were looking at. They were looking at a capitulation. But at the moment, if the retail traders are getting hold of this, they may not get their way. But I think you bought in way. I think you bought way too high. Let me see. You bought in the 50s. Yeah, I think you bought way too high. And the key to this is volume. The lifeblood of this stock, any stock, is volume. In the 50s, there was no volume up there. You had all this. Yeah, fundamentals are I do examine fundamentals, definitely. Every single time I take a trade, I look at fundamentals. But my overriding decision is made on technicals, on price. I would not trade a stock. This is just not, my trade plan wouldn't allow me to trade this stock because there's no volume. Primarily, that's the main thing. Yeah, I'm not going to sit in a stock when there's no volume. For me to buy this up here, I want to see the volume back up to these levels here, which is where we were back here. I'm not going to trade a stock where the volume's fallen off. Even now, it's not great. So I think the prospect, unless this volume starts to get up to this 100 million level, this might still pull back on itself. Yeah, but if you want to find these stocks, if you want to day trade these stocks and find these stocks, then you need to come on the program. All right, I'm done. I've done more than 20 minutes, but interesting session, and thanks for thanks for letting me know about how you're trading it, and so just be aware of what you should be looking for in these stocks. But the biggest single issue on this stock, if I take all this away, well, two things: A is volume, as I keep going on about, but B, it's what happens in that range. And on the 14th, we close underneath it. At the moment, subsequent highs are getting sold into. So we could still come down to this range. If this is gonna have a decent chance of getting back to the highs, it's got to stay above 36 as a minimum and 40 fairly soon. Otherwise, you could find yourself seeing this pull right back. Right, thanks very much. It's much cheaper if you do the program, but yeah, that's up to you. Drop me a line if you're interested. A really fun day. I'm just going to go and grab something to eat. I closed off all my trades anyway for my day trades, and yeah, great day. Thanks very much. And I do this every Tuesday, so watch out for the link for next Tuesday, and then come back and I'll take another look at what's going on. Cheers, bye.